Good morning, all of you. Today we are going to discuss about the national income accounting. Last day we have seen the definition, Marshall definition, Pigue's definition, and modern definition. Today, in continuation with that, we will see the 2-3 section A question and a section B question. There is a possibility of case study in this particular question, because a list of figures will be given and you have to solve, you have to calculate the elements of national income accounting like GDP, GNP, disposable personal income, all these things that you have to calculate. This particular question you can expect as a case study question. First possible section A question is what are the basic concept of national income accounting, or what are the elements of national income accounting? If they ask, you should write these 7. What are they? First of all, you should say what is the national income is. There are 2 possible national income. One is with a factor income, another one is with a market price. So it is a total of factor income. Let me admit 2 of you are joining. It is a total of factor income, that is a wages, interest paid, rent paid, profit acquired, all these things which are extracted from the labor, land, capital, and the other administration of the nation. So there are 7 concepts in national income. What are they? GDP, GNP, NNP, NI, PI, DI, and PCI, which are explaining the facts of economic activities. Let me expand each of them. GDP means gross domestic product. Then what is GNP? Gross national product. Then the third one, NNP, net national product. And the fourth one is NI. Here there are 2 national income. One is national income at factor cost, and the second one is national income in the market price. Then fifth one is PI, personal income. Then the 6th one is DI, disposable personal income, and finally PCI, per capita income. So these are the 7 elements of national income accounting. For your sake, I will repeat again: gross domestic product, gross national product, net national product, national income, both in factor cost as well as the market price, then personal income, then disposable personal income, and finally per capita income. So when they ask the section A question, what are the basic concepts, then you have to list out these 7. Don't write the abbreviation, you should expand. GDP hyphen gross domestic product, GNP hyphen gross national product. You have to write in full form. Then only 3 marks will be given. Sorry, that 5 marks will be given. Then coming to the second part of it, we should know why it is important, or simply they write a short note on national income of economics. If they ask very generally, they are not specifying with the elements, though you have to write why it is important and what are all the components that we have. All these things that we have to mention in under this. So mainly you have to mention 2 points. First, you should say what is national income is. National income is a total value of country's final output of all the goods and services produced in 1 year. That is, it is an annual statement only. For a particular year, what is the total output of all new goods and services produced in that particular year? Understanding how the national income is created is a starting point of the macroeconomics. Whenever you want to study about the macroeconomics, means you should have some basic knowledge about the national income accounting, failing which it is not at all possible to understand the macroeconomics, because it is a starting point of an macroeconomics. Then we have to say what are all the 4 components of national income we have to mention. It is nothing but the 4 sector model that you have to say. The 4 critical drivers of Indian economy, we should say the gross domestic product as personal consumption, business investment, government spending, and net export. Net exports are the difference between the export and import. So what are the 4 factors? Housing, business, government, and foreign sector. So these 4 are the components of national income accounting. So whenever they ask very generally, write a short note on national income accounting, then you should say what is national income is. That is, national income is the total value of country's final output of all new goods and services produced in a particular year. Then mention that the starting point of macroeconomics is the basic knowledge about the national income. Basic knowledge means you should know what are the 7 elements. Then what are the 4 components? You should mention the sectors. Household sector, that is consumption side. Then business sector, it is in the production side. Then government spending, public spending. And finally, the net export, that is the difference between the export and the import. Then based on these 4 values, we can easily project whether that economy is improving or not. Now we will see the elements of national income accounting one by one. First, what I am giving is GDP at market price. The GDP at market price is the money value of all goods and services produced within a domestic means indigenous products, which is available in a particular year. Normally, if you see the modern economics book, GDP equal to price into quantity, they used to say. What is price into quantity? The price of all goods and services. And Q is the quantity of goods and services. So when you multiply the price of both the physical product and service product with the quantity produced or quantity service rendered, then we can get the GDP. This particular GDP also in the modern economic book, they are given as GDP equal to C plus I plus G plus X minus M. What does it mean? It's nothing but C stands for consumption, I stands for investment, G stands for government expenditure, and X minus M is nothing but difference between the export and the import. We may say net export minus import. So whenever they ask a separate question, hey, what do you mean by GDP at market price, means you should write this. But actually, in a traditional 60s and 70s, some books now, they used to say the total output of agriculture plus industry plus service, we used to call it as GDP. But now the economy have expanded, the GDP market price itself is including the net foreign earnings. Then we are moving to the next one, gross national product. Understand one thing, there is a slight difference between GDP and GNP. GNP is a market value of final goods and services produced in a particular year by whom? The residents of the country within the political territory or domestic territory, as well as it includes the foreign earnings, that is abroad. The GNP is a value of goods and services that the country citizen produce regardless of their location. Suppose an Indian is working in a foreign country, he is a non-resident of India and he is contributing to us, and that amount should be included. That is why the formula will be GNP equal to GDP plus NFIA. What we mean of NFIA? The net factor income from abroad. So the formula goes like this. How? GNP equal to C plus I plus G plus X minus M plus NFIA. What we, once again I'm saying, C stands for consumption, I stands for the business sector, the investment, G stands for the government spending, the government expenditure, and X minus M is a export minus import, and NFIA is a net factor from abroad. So first element is GDP, the second element is GNP. Here the net foreign earning also we are including. Now what is the third element? It is a NNP. NNP stands for net national product. The two it is I am explaining in a market price. NNP at market price is a market value of net output of final goods and services produced in an economy during a year, and net factor income from abroad. A slight difference, we have to deduct the depreciation value of the all assets. So NNP is nothing but GNP minus depreciation. So how you have to write? Once again, you have to write NNP equal to the same formula: consumption, investment, government spending, net foreign earnings plus net factor of, from abroad, minus we have to say indirect taxes and the depreciation we have to subtract. So the formula is NNP equal to C plus I plus G plus X minus M plus NFIA, and then we have to put minus What is the minus? Indirect tax you should IT minus depreciation. So once again, I repeat again, C is consumption, I is investment, G is government expenditure, then export minus import. Then we have to add the net factory income from abroad also, and then we should subtract two things. One is indirect taxes and depreciation. From GNP, when you deduct the indirect taxes and depreciation, definitely we can get the value of net national product. Now the fourth factor is national income. It is also known as national income or factor cost, which means the total income earned by the resources of their contribution from four factors of production: land, labor, capital, and organization, with their ability. Means the sum of the income received by the factors of production from rent, wage, interest, and profit is called national income. So we are not only bothering about the factors of production, but also the remuneration out of the factors of production. That is why the formula goes like this: national income is equal to NNP plus subsidies minus interest and taxes. So first we have to calculate GDP and then GNP and then NNP. From NNP only, if we add the subsidies and subtract the taxes, we can get the national income at factor cost. So now we are moving to the fifth factor, is personal income. This personal income is a total money income received by the individual and the household of the country from all possible sources before direct taxes. That is, direct tax means income tax, salary, rent received, and other taxes which are directly related with the central government. So before deducting the tax, that is called personal income. Therefore, personal income is nothing but from the national income. When you subtract the corporate income tax and undistributed corporate profit, and then we have to reduce their social security contribution. That is a war in a Gargil. We have paid that. So that is the social security contribution. If this is a pandemic situation, the government is inviting for grant, and we are giving donation and other thing. That is the social security. Apart from that, we have to subtract the transfer payment also, because of the change in the status of the some area will be a village area, some area will be a rural, some area will be a township, or some area will be panchayat, somewhere like metropolitan city. So there is a difference in the area now. For that we have to give some city compensation allowance. We used to call it as CAA, city CCA, city compensation. That city compensation allowance is nothing but transfer payments. So from this personal income, when you deduct your income tax and other direct taxes, then we can get the disposable personal income. Suppose my salary is 1.5 lakhs, then I have to pay 30% of tax. So nearly 40,000 rupees I have to pay income taxes. So 1 lakh is my disposable income. Then finally, the most important element of national income is per capita income. What is per capita income? It is the total national income divided by population. So this particular thing is a key indicator for the status of the country. We can measure the poverty line based on this only. So per capita income is calculated by dividing the national income of the country by total population of the country. That PCI equal to total national income divided by total national population. Tomorrow I am going to take what are the methods to calculate the national income. For introductory part, I am saying these are the three measurements. What are three measurements? One, the income method, by aggregating the total income earned by the country is called income method. Instead of income, if you see about the output or the physical product, then it is called production method. It is otherwise called product method or value added method. Finally, instead of income or physical product, it is better to calculate with the expenditure. How much expense is met by the country? Then it is also a best method to calculate the national income. So there are three methods. One is income method, production method, and expenditure method. With this, I am winding the class. If you have any doubt, you can ask me.